Let's take a look at what is happening around the major currencies and around the globe. The Euro-United States dollar hit a low at 1.2967 to close at 1.3018 after Eurozone PMIs printed weak, as did the zone unemployment numbers. The United States dollar gained momentum all week, starting with testimony by Chair Ben Bernanke, followed by strong eco data. The sequestered budget cuts came into effect like U2K, with lots of warning and little reaction. President Obama on Friday signed a bill making the cuts official. The planned spending cuts, which could total $1.2 trillion over a decade, are expected to trigger from March the 1st. The first round of cuts would total about 85 billion over 7 months. The spending cuts would be spread across defense as well as non-defense sector. The World Bank cut its projection for economic growth in the United States by 0.5% to 1.9%. It also reduced its forecast for Japan to 0.8% from 1.5%, and predicted a second year of contraction in the euro region. They also lowered estimates for emerging markets led by Brazil, India and Mexico. China's growth, the biggest copper consumer, was cut to 8.4% from 8.6%. Lower growth forecasts are likely to hurt demand for industrial metals and can push prices down. The Eurozone GDP contracted by 0.6% for the previous quarter. Germany, Europe's largest economy, shrank by 0.5% after a 0.2% expansion in the third quarter, with French economic output declining by 0.3%. The recession is expected to continue in the first half of 2013, after which economic activity would recover gradually. This is likely to keep metals demand subdued. The GBP United States dollar continues to look for a bottom, hitting as low as 1.4986 to close at 1.5035. Odds of policy move are greater for the Bank of England. While a fair majority expects no change, 11 out of 39 forecasters expect the Bank of England to increase its set purchase target. Forecast varies from 25 to 75 billion pounds increase. Governor King was already in the relative minority of voices calling the greater stimulus at the February 7th policy meeting, and it's possible he will have more supporters in the wake of recent data. European data risk will be relatively moderate in nature. The potentially most significant releases will be German factory orders and industrial production toward the end of the week. Service sector PMIs across Europe will be watched, particularly for the United Kingdom, in the wake of the shift toward renewed contraction in the manufacturing sectors, and in advance for the Bank of England announcement later in the week. Well, and back to United States dollar and Japanese yen. This pair returned to its higher range of 93.54 after tumbling a low of 90.91 and a weekly high of 93.69 after Prime Minister Abe nominated the head of the Asian Development Bank to head the Bank of Japan. The Japanese yen remains on the defensive. Japanese economic recovery prospect will be influenced by persistence of tension in bilateral relations with China, a swift policy shift to generate inflation, and competitiveness boost from a prolonged phase of currency weakness. Aggressive pro-growth financial and monetary stimulus from the Japanese authorities will inject a dose of mild inflation and faster growth by the end of the year. Gold 175.50 of the weekly high of 1,619.40 reached on testimony of Fed Chair Bernanke. Gold traded on a volatile path, tracking mixed trend of international markets. Well, gold fell 5% in February due to dollar strength, reasonably positive economic data, aggressive selling of paper gold on the COMEX, and poor sentiment. More speculative players on the COMEX sold gold futures aggressively during and after the Chinese New Year. Gold was vulnerable at this time due to the complete absence of Chinese demand for physical for those few days. In euros and pounds, gold only fell by 1.1% and 0.7% respectively. So that's all for today. More details you still can find on our site www.branchcapital.net. And have a nice, profitable day today too, and all this week too.